somehow, not very comfortable with it. So BSc is where all the results come. So you have to prepare for this, result season. You have to understand how is it spread out. The result season typically will start at the beginning of the quarter, beginning of the next quarter, right? So for example, right now we are in March, right? So April, the result season will start. The initial 10-15 days, there'll be meat of the results will start from 15th April to 15th May or so. So a lot of results will come, at that point in time. So you have to prepare. You have to, be up to date with the result calendar. What are the results which are there tomorrow? What are the results which are there day after tomorrow? So you can build a lot of setups, with this. A lot of times stocks will rally into the results. If the last quarter has been good, then this quarter the stock will rally even before the result sometimes. So you have to have a good sense of when the results are announced and when is the result likely to come. Right? Day and time of the result, you have to be ready, especially if you have a watch list and you're looking at a particular set of stocks, then you have to be ready because you have to act quickly. Because like I said, in a bear market, you will get opportunities, but in a bull market, the stock will just take off. It will not give you have to buy on the day of the result or the next day. If you buy beyond that, a lot of times in a bull market, the stock will run away very quickly and a lot of gains from the table will, go for a toss. So during market results will come again. If it's very difficult for a individual to play this because you have to be really prepared. So sometimes during market results will come, which will give you an opportunity to get in immediately if you can analyze these things very quickly. Most results will be post market, so you will have at least the overnight time. Post market in the evenings results will come. So you will have time to really look at the results. And nowadays, Screener also is, updating the results quite fast. So you'll be able to do a comparison also quite quickly. So post market is where most of the, action I think will be more applicable to most of us. During market is a bit of a stretch because you have to be very quick to analyze and, decide and move ahead. And then finally, you have to post the result. You have to do the analysis, like we discussed. What are the different parameters you have to look at? Finally, let's look at the portfolio construction. Like I said, this is a setup where the odds of working are high if you find the right candidates. So if all the conditions are matching, then the odds that you will make money are quite high. But we have to be diversified, right? So like I said, you will go wrong. There will be situations where you think the results are good, everything is great, but the market will not encourage it, or market will not really move. So you have to diversify. Optimum size, according to me, is about 20 to 30 stocks. And what this 20 to 30 stocks will do is it will obviously give you the risk management, built-in risk management. When you say 20 to 30 stocks, you are taking about 3 to 4% in each stock kind of a bet. So even if something doesn't work, you'll still be able to manage. You'll still be able to book out at a small loss, and at the portfolio level, you will not have a huge impact. But it gives us a lot of times. I have seen the best performing stock in my portfolio will definitely not be the one which I thought will perform the best. It will always be a surprise. So when you spread out your bets in 20, 30 names, the one that gives you the surprise, the possibility of that, bringing in that element of luck, that element of, surprise within your portfolio will be much higher. But of course, there has to be a sweet spot. You cannot buy 100 stocks, So I think the sweet spot is about 20 to 30 stocks, 20 to 30 stocks spread across, large cap, mid cap, small cap will give you a fair bit of, where all the 20, 30 stocks have an earnings tailwind. If you build a portfolio like this, you can expect to do reasonably well, without much, because even in a bear market, what will happen is because these stocks have earnings tailwinds, they will not fall so much. They will fall relatively less than the rest of the market, right? Unless a new, news comes, like it happened in Adani. Adani Power gave you a great number. Stock went up 50% in a matter of 2 months. And then another news came which completely negated the thesis, right? Which completely put a question mark on the future of the company. So unless something like that happens, these stocks on an average will always do better than the rest of the market in aggregate because they have an earnings tailwind. Okay, and like broadly to give you numbers based on my experience, right? So in most cases, if you're wrong, you will lose 10-15%. Provided that you exit in the next quarter, if the results are not good,